Hi, my name is Simon Snowder, and today we will talk about why does the stock market in general go down when interest rates go up. So why basically do they not like this? So first of all, corporate lending is an important part of it because companies like to borrow money and then do buyback programs, so they buy back their own stocks. So when interests are low, they can borrow a lot of money and pay virtually not much cost for that. And also companies, they borrow money for merger and acquisitions and also for their own expansion or for their own costs. So when interest rates go up, corporate companies can borrow less because the cost will increase, and also on their existing lending that they have put out, on the refinancing they need to pay higher costs. So that is, in the end of the day, not good for corporate companies. There is also something which is called the risk-free rate. So if interest rates go up to a level, let's say, of 5%, then anything above 5% is what you will make with a risk. So if the average return in the stock market is, let's say, 7 or 8%, and the interest rates go up to 5%, then you can only make 2 or 3% if you put your money at risk. So why would somebody put their money at risk for 2 or 3%? That's basically the question that people will ask themselves, especially the big funds out there that dominate the stock market. There's also something called the shift towards government bonds. If interest rates go up to levels of, again, 5%, then you get a 5% on a government bond in coupons. So what the equity market normally does, in equity investors, they switch out of the equities and go into bonds because they can get 5% risk-free, or basically without doing much. And they think that's more attractive than to put the capital at a growth trajectory in the stock market. So typically what you see is that also the opposite happens. When interest rates go down, then people pull out money out of the bond and pour it into the equities because they can have a better chance there to make money. So this is happening right now, all of these things that I just explained. That's why the stock market partially is going down. This was Simon Snowder. I hope you enjoyed this video.